Yes, you currently have 8% of your assets under management in Tesla, since it has increased by 20 times over the last 2 to 3 years. You might recall that I mentioned I believe we would make 20 times our money on this investment when I first came on and was explaining it. Furthermore, what knowledge do you possess? We invested $380 million, and the average price was about $40 per share between 2014 and 2016. Since then, we have made approximately $1 billion, roughly 20 times, in total. We have, made roughly $6 billion thus far. We liquidated nearly $1 trillion worth of stock because you insisted on not having it become an even larger holding in the portfolio. Yes, it was that I was receiving a lot of flack for owning so much of one stock in two of our mutual funds, Barron Partners Fund and Barron Focus Growth Fund, at such a high percentage. How can you be so crazy? Many asked. I therefore wanted them to believe that I wasn't insane. I am aware of my madness. With a $7 billion investment, that scheme was expected to yield $115 million annually, or $15 billion. A typical industrial business would profit 15% of capital, at most 20%. Twice a year, this guy makes his capital. He is currently only manufacturing it once a year. He's the least expensive individual, making $8 billion on a $7 billion plan. The goal of the entire company is to reduce pricing. They will be in the early 1900s right now. The car manufacturers were amazing innovators. That is no longer the case. They decided to pursue profitability in the 1950s, and to their detriment, they outsourced every aspect of their supply chain. As a result, all of these businesses filed for navigation of intricate engineering obstacles, which he solves with a quick glance and sage advice. One invention at a time, Elon Musk is guiding not just Tesla, but also the future of transportation and beyond. It's evident from Barron's passionate explanation that Elon Musk personifies the spirit of inventiveness and unwavering pursuit of advancement. Barron claims that he is constructing a future in which the limits of what is feasible are continuously pushed, not just building cars. And Barron thinks it's a wager worth taking in a world that is rife with invention. As we look to the future, let's keep in mind that the next Tesla, led by a visionary unlike any other, might be around the corner. If you're an engineering graduate from a prominent institution, your goals may be to work for SpaceX or Tesla, as Ron Barron so eloquently describes. Why? Because you are itching for the chance to work with other bright minds on an important project that you feel will have a lasting impact on the world. Barron draws attention to the extraordinary competition for jobs at these organizations, with an astounding 3.5 million applicants seeking just 30,000 vacancies in the previous year. He notes that being hired by SpaceX or Tesla is more difficult than getting into Harvard. However, those who succeed do so because they have a common objective and mission, which gives them momentum. What about the dangers now? Barron agrees that risk is a given, particularly for smaller businesses. But he's wagering that these businesses will not just survive, but flourish as they expand. He believes Elon Musk will stay at the forefront for at least the ensuing 5 to 7 years. He's willing to place that wager. Turning around, Barron considers the state of the world today. Given the ongoing geopolitical unrest and worries about the U.S. budget, some people may wonder if investing in stocks makes sense. However, Barron's viewpoint is based on his personal experience. He tells a story of how, in the 1970s, he barely made ends meet as an analyst with just $600 in cash and a subpar credit score. He even tells a funny story about how he came up with a creative way to answer calls without having a phone. Thinking back on his relationship with legendary hedge fund manager Paul Tudor Jones, Barron notes that while Jones has a talent for timing the market, their investment philosophies are not the same. Barron considers himself an investment with a long-term perspective, whereas Jones is a trader. He reminds viewers that economic growth continued throughout the turbulent 1960s and draws comparisons between that era's struggles and today's issues. Barron has a cautiously optimistic perspective. He continues to be optimistic about the economy and the stock market despite the uncertainty because he values creativity and resiliency. It is a viewpoint molded by many years of experience and a thorough comprehension of market dynamics. But who else is as optimistic about Tesla as you are? That would be Seeking Alpha, our sponsor for today. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. The finest online source for pro-Tesla news is Seeking Alpha, so avoid the lamestream media's anti-Tesla propaganda. Our channel might receive a commission if you click on the affiliate links in the description and make a purchase. I appreciate your help. Returning to the subject at hand, Ron Barron's examination of the economic environment takes us on an enthralling historical voyage that offers insightful information on the future direction of the stock market. As Barron examines the data, he draws attention to the Dow Jones' phenomenal rise, which has seen a rise of 34 times its value since the 1960s. He clarifies that this exponential rise corresponds to an average yearly gain of about 7%, exceeding inflation by about 2%. However, what does this actually entail in real life? Let's dissect it. Assume that, in the 1960s, you made an $11,000 stock market investment. With the market's steady rise, that initial investment would have grown to an incredible $334,000 in the present day. As Barron highlights, the stock market's long-term performance is largely due to this amazing compounding impact. Let's now tackle the big issue, the difficulties and doubts that will unavoidably surface along the route. There are obstacles on the path to financial prosperity, such as wars, economic downturns, and pandemics. However, Barron highlights an intriguing trend that exists in spite of these obstacles: the market's ability to bounce back from setbacks. Barron tells us that the market has an amazing tendency to recover, doubling